Did Nvidia lie to us? Is the AI bubble bursting? Was it a bubble at all? Is it a bubble at all? We're going to explore these questions with the 30-year expert veteran of technology research that Jim Cramer used to pay for picks, that George Soros used to pay for picks. If you saw the movie Dumb Money, if you haven't seen it, that was the movie about Roaring Kitty, you know, the GameStop saga. Stevie Cohen in that movie, former customer of mine. We're going to review this. Not what the dummies say, 10,000 idiots out there trying to trick you into clicks, tricks for clicks. The real deal, okay? With no sponsorships, no advertisements, no BS. I'm only here to give back because I was given. Somebody took me out of the matrix and told me about the BS that colleges give you, that CNBC gives you, that these 10,000 clowns on social media give you. All these interesting articles that are really just there to get your clicks, and it doesn't matter if you make money, and you probably won't if you are paying attention to these idiots. And we're going to talk about that, as well as what to do about this market crash on Stock Talk Live. We are just waiting for the live studio audience. I'm going to verify right now that we got good audio and video, as we do every week. We do. We got good audio. We got video. We got a decent audience coming in. You veterans, share the live, retweet the tweets. By the way, right, while we're waiting for the live studio audience to come in, where are we? Where are we? That's already done. That's good. Okay, here we are. We are just 11 followers away from 8,000. Okay. So I don't usually push for people to follow me and all that stuff. I do ask for the thumbs up because that spreads the word that there's somebody here doing this out of the goodness of his heart. No money, no sponsorships, no subscriptions, none of that BS. Right? And all I ask is to spread the word. And every once in a while, when we get towards a milestone, yeah, in this case, it'd be nice to get to 8,000 in the course of this show. So if you haven't followed me, Money Mark Stocks is the handle on X. Let's get this to 8,000 during this show. And in the meantime, we have gotten to the requisite number of people in the live studio audience. So you know what it is. It's Friday. It's Money Mark. It's Stock Talk Live, another big show. As always, we got the clowns out there trying to trick you, tricks for clicks. We're going to go through it, and I'm going to give you the real deal. 30 years of experience to let you know, are these circular deals? Did they lie? Is their accounting aggressive? Yeah, we're going to talk about all that on Stock Talk Live. But first of all, we got a CYA. You know what that means. I got to put the disclaimers on the screen. Make no mistake, if you are looking at this show, in the description of my video, there are a number of links, some of which will take you to, for example, of course, my Twitter, but there are, there's this article right here, Get Rich on Stocks. These are the instruction manuals, okay, on how I became a millionaire, a multi-millionaire making 7 figures a year from being nearly homeless. I was living in a basement, not a basement apartment, a basement with a $300 a month budget to live, including rent. So you go try to take $300 and live off of that, pay your rent, pay your food, all that stuff. Wasn't easy. But thanks to my mentor, I'm here now, from a loser trader with no money to having more money than I'll ever need. And so I put the cheat codes here on my Twitter account, this recording for you, hour and 40 minutes of your time. All for you, by the way. There's no advertisements or sponsorships or subscriptions in there either. Here, this article will take you about 5 minutes to read. And then this video right here on my YouTube page, Make Millions with Mark. Okay, so if you check those things out, you're going to learn about my long-term process. All right, how I build my risk-reward lines, the green lines, the red lines, the white lines, the gray lines. Right, otherwise it's going to be all confusing to you. Most of the people on this video right now have already done all that, so I'm not going to explain it. You either go find out or you don't. I'm just here to lead the horses to water. It's up to you whether you drink or drown in it, right? But make no mistake, these disclaimers are important because I have my long-term views that I provide on here with these charts, but I also short-term trade if these stocks move in a way that seems to be deviating from a nice, steady path towards what I consider their long-term value. So I buy, I sell, I do whatever I want, and that's what these disclaimers tell you. So blah, 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 blah. All right, hopefully I didn't bore you to death with that, but we got to have the disclaimers portion so that I cover myself legally. So suffice it to say, if you are watching this show, that you have read these disclaimers or had somebody read them to you, and you acknowledge and accept that it's okay for me to do whatever I want in my activities in life, and that you're responsible for yours. We want no manipulation. We want, we ain't here to pump stocks. I don't expect y'all to jump into any names or make any names move, right? Because then I'm liable to assume that you are following the instructions and not pumping a stock. And if a stock pumps, it's not because of me, and I'll take advantage of it. All right. A little extra this week, but you can never be too safe. So let's get right into it. I'm not going to go through the whole. Yeah, I am actually going to go through one thing. All right. These clowns. In fact, we'll go to the clowns and then we'll go back to this because I don't want to bore you any further. Let's get into it. Fear Greed Index. This bottomed out at 6. It's currently 12. All right. The last time we saw it this low was during the tariff tantrum. It bottomed out at 3. Where's the 3? There's the 3 on April 8th. Okay. We just got down to 6 today. All right. And so let's go and look at what happened on April 8th when the market got down to a 3. April 8th. Whoa. Look at that, ladies and gentlemen. When the Fear Greed Index hit 3, the market hit its bottom. If you bought stocks this day, let's say at the close of business, it closed right there. At the market's peak, you made on the Russell 44.6% in 6 months. That's 100% annualized. Okay? I make 40+% per year. This happened in 6 months on an index. That's crazy. Just by being greedy when others are fearful, like Warren Buffett says. And this is what I tell y'all. A lot of you guys are trying to think too much. There's a simple set of rules out there, and if you just focus on those simple set of rules, you get rich. For those of you just joining in, we are going to talk about Nvdia, we're going to talk about AI, we're going to talk about a lot of stocks, we're going to do a lot of charting. We're just doing the intro right here. So anyways, that's something to keep in mind. Yes, there are scary things going on, and I'm concerned about them too, because frankly, I'm the one that gave y'all the yellow alert, right? Not too long ago on the Qs, there's your yellow alert. And here we are, well below the red line. We breached the red line. I said yellow alert. Now we're below the red line again. That tells you that the market is down since I gave you the yellow alert. Okay? It's not that I'm bearish on the economy or stocks. We had great earnings season. We had great earnings out of Nvdia. But there's always a valuation for everything. And if you pay too much for something, you go out and buy a house, it could be a really nice house that's going to be worth more in the future. But if you pay too much for it now, it'll take you a long time to get that profit in the house, clearly. And we see this now in the stock market where on all of these indices, if you sold out of the indices on the yellow alert, if you follow the rules, get rid of your speculative names, they've been destroyed. You get rid of your wait time names, they've gotten destroyed. Speculation on crypto, absolutely demolished. And in fact, what you got on Bitcoin right now is really disturbing because the trend lines have now been broken on Bitcoin. Now, that doesn't mean we're dead because we poked above the trend line here. So when there's a poke above, there's usually a poke below that comes in the future and vice versa. So can we regain the trend line? We'll see. If it can't, if it rejects the trend line and heads lower, that's a sign that we're going 2 steps down, 1 step up, 2 steps down, 1 step up. We're in the 2 step down. Does the 1 step up get us back in a bullish territory and then hold that line and start moving up? We'll see. But we haven't gotten that yet. The thing that I will say is when the market starts to go straight down, that's usually a sign that we're going to get a V sometime soon. The problem with Bitcoin is that we've been going straight down for a little while now. Things don't go to zero. So keep that in mind. And you know, I'm not a Bitcoin guy. By the way, for those of you joining in, I will have Q&A. I think we're going to have extra Q&A today, which is contrary to what happened last week. If you have a question, put it in the chat with question marks at the beginning of your question. At the beginning of your question. By the way, if you like that somebody comes out here who's a 30-year veteran of Wall Street, not trying to take your money, not trying to lie to you, here to kind of help you cut through all the BS that's out there, just give me a thumbs up. That's how you spread the word, by letting other people know that this is good content for you. No tricks, no clicks, no sponsorships, no advertisements, no subscriptions, none of that BS. This is just my donation of time to y'all. All right, let's get into it. We got to get to stocks. 2-year yield is dropping. All else being equal, that's good as long as we're not going to a recession. First order of business, by the way, for those of you who own BOXX, we've been accumulating a lot of BOXX. That's where we're putting our cash, and we have a ton. I've never had more cash on the sidelines in my life, thanks to the rules of the yellow alert. The yellow alert hit, I sold my speculative names. I sold the wait time names. I was taking profits on names on the way up. You guys saw what happened. Drone Shield, we made, what, 4 times our money on that? And look at that, fully reversed. I got us out at 2. It went to 4. People are like, ha ha, Mark, the stock went from 2 to 4. You shouldn't have gotten out. Yeah, well, now it's 1. How do you feel about that, dumbass? It's what I tell you about valuation. All right, you see these white lines? These white lines are preliminary red-green lines, and the red-green lines are valuation lines. We went above fair value by my calculations on Drone Shield, and I'm not perfect, I'm not God, but you see what's happened in the past. I'm pretty damn good, right? You saw what happened at TSSI, got above the red line, crashed. Drone Shield, got above the red line, crashed. We're seeing Oracle, right? So the market's not in a bubble, but many bubbles formed, and wow, I didn't even realize this one right here. I came out and told y'all this was a short. And boom, 40, bro, I don't think I've ever seen Oracle, probably since the 90s. I don't think I've seen Oracle drop 44% in 2.5 months. But that's what you get. I told you Supermicro was a short. Look at that one. Okay? These are the things, and I'm not about picking shorts, but sometimes it's just obvious. And when it's obvious, that's when I'm going to give it to you. I'm here about longs, long-term valuations. I do my own trading. You do your own trading. Follow those rules, etc. But this is what we're dealing with. Luckily, the pullback, especially in the IWM, has got us pulled way off of that red line, so that's nice. We zoom in. We're getting pretty close to the 200-day moving average from current levels. There's only about 6% left before we get down to the 200-day moving average. That would be a 15% correction on the IWM. And yes, we are going to get into individual stocks and Nvidia in a second. We just got to work from the top down, so hold your horses. And then, oh yeah, so we have built up all this cash, and we've been putting in BOXX, which is a safe vehicle to make about 4% annually. But I have so much money in BOXX that I want to spread my money out into some other vehicles to protect, just in case of the 1 in a million lightning strike that something goes wrong with BOXX. Almost never, ever, ever happens, but why take chances when you can spread your money across similar instruments? Okay, so from that perspective, I like what you got on the screen right now. I spread my money out into I still have BOXX, by the way. I just sold a big chunk of it, though, to buy GMMF. Also MINT and USFR. I know there's PMMF on the screen, but one of my boys told me, be careful of that one, it's a little tricky. All right, so these other ones, right, we can spread our money out, still make our 4% on our cash while we wait for the bargains. And by the way, I have been buying today. You've seen the stocks out there that have taken hits. You get like an IZEA taking a pullback. Right? That's an opportunity. For those of you who didn't, like, and I've told you, remember when I first picked the stock and somebody immediately hit the buy button and the thing went crazy? It's like, yo, don't chase this up to $6. You can wait a little bit and buy it at 5. And anybody that waited and bought it at 5, look at this 5 wall. Right about $5 a share is where you see people come in and buying at 5, and you get that opportunity because not everybody knows the long-term value that IZEA represents, and I've talked about it before. And yes, there's trading going back and forth, so you gotta account for that. So the stock moves too fast, people are going to take advantage and sell. The stock pulls back too fast, people are going to take advantage and buy. This is how you take advantage of situations. All you have to do is look at the chart. You don't have to be an expert on charts to look at a chart and say, for example, there's your chart pattern on IZEA of late, right? And at the lower end of this range, I want to be a buyer. And at the higher end of the range, I want to be a seller. And look, we got to the higher end of the range. Duh. Now we got to the lower end of the range. Duh. You feel me? This part is simple. And all you got to do is draw a line over the highs and lows to get a sense as to where we are in the mix of the bigger picture, right? Which is the red and green lines, the long-term valuation lines that I draw for you. And this is how I feel about the long-term prospects of IZEA. But of course, if the stock runs to $7 today, tomorrow, or next week, I'm going to take some profits. I'm not saying I'm going to sell out completely, but I'll take some profits because I'll be able to probably buy back in at 6, and continue up to 7, down to 5, up to 8, down to 6, blah, blah, blah. If you are into that sort of thing. Very simple to do, right? We're going to talk about other stocks that meet that description in this video. So there you are on the BOXX. That takes care of that. Now, in no particular order, by the way, Nvidia is next up on the show. But let's talk about XAI, Elon Musk's company. This just came in. Thank you, whoever it was in my community that brought this to our attention. This is what I love about my inner circle community, is that they are contributors. They understand, they've learned the rules, and they understand how to contribute good content to what we have. And what he did, that's Doug. Shout out, Doug. This is a job wreck at XAI. Okay? Well, what the hell do I care about a job wreck? Just listen, will you? XAI is put this job request out there. They're looking for a world model engineer. Okay? What does that mean? Well, if you've been taking notes, and remember I tell you, these are the 2 most valuable tools that you have. A notebook and a pen. Take notes. Okay? These videos aren't going to always be out there for you. This content's going to always be out for you. And I'm not going to be here to hold your hand. I'm out here trying to make money, just like you are. We're kind of competitors. Okay? So, what this is, right? Going back months, I told you that the AI hyperscalers out there and a lot of corporations out there, a lot of AI startups, they want a 3D model of the entire Earth because the content, what's in that, right? That model can be used alongside AI to do innumerable crazy things. We already see it with Intermap using the elevation-based data to help insurance companies figure out where there's flood risk, for example. And that data gets refreshed as Intermap refreshes its maps, goes up in the sky, and redoes all the altitude calculations, and they can tell you where water has been rising. And that elevates flood risks. And so the insurance companies say, whoa, we don't want to be there. Thank you, Intermap, for letting us know where there's flood risk. So to see XAI, which, by the way, affiliated with Starlink, right? Elon Musk, XAI, Tesla, Starlink, all that, right? This is where you could see Intermap come in. And I said this months ago. If we need a 3D model of the entire Earth, who is going to go up in the sky and calculate all of those altitudes, elevations, etc.? Intermap is ideally suited for that because they spent literally, I've known this company since I think 2010. So let's pull the chart way back on here so you can see. This is the Canadian version, by the way. Stifle with a price target of 5, which is 2x where it's going for right now. I'm a little cautious on the stock at the moment, although it's pulled back, so that creates opportunity. If you don't have any Intermap, if you don't have any IZEA, these are opportunities to get your foothold in these stocks, okay? We had a great run in Intermap, and so we're getting a little pullback, but we're still upper in the range, right? And we're waiting for a major decision that's going to shape the face of this company going forward, which is the 200 million Indonesian contract. I would rather react to that contract. I'm not saying I don't want to own any of the stock, but I don't want to be loaded the boat on the day that those contract awards are made and find out they didn't win or they didn't win enough of them. That's what happened to Drone Shield a little bit. They lost a good chunk of their own country's tender and the stock fell out of bed. I'm not saying that's going to happen here. I think Intermap is in the driver's seat to win. You just don't want to lose a boatload of money on the off chance they lose. I'd rather react to the win because a lot of times the reaction isn't good enough. Proof being back here when I told you to buy air, right? We'll move in on the, let's see if I can get this on the daily chart. There you go. You see that right there? I said buy right here on this little spike. Let's move the arrow. It was there. Let's not lie and say it was here. This little spike right here, right? I said you can chase this little move because it's not enough. And it wasn't. Once people realize what's going on, when news comes out, people don't react immediately. They don't see it immediately. They don't digest it immediately. They don't know how to analyze it immediately. It takes time. And in this case, you paid up a little bit for air. You know, it was like up 15, 20%. There you go, 13%. But then if you chased that move because it was right to chase that particular move, you got a 700% return in 4 months on this buy. I'm not going to call it a recommendation. Right? In fact, I shouldn't even call it a buy. Like, we got to be careful in this world. That was my buy. Let's put it that way. It was my buy. Nothing I say on the show is for you to buy. It's for me. Anyways, so to see XAI making a move here is a sign that, okay, what Money Mark said months ago is correct. It looks like these hyperscalers are going after 3D Earth and Intermap, all things being equal, this is a positive for them because they should get some of that business. All right. Okay, let's get into this dummy. I'm sorry if you hear about this, Shanaka. Nothing personal. This is my opinion. You can come back with your opinion that I'm an idiot, but it's my opinion that you're an idiot. You are a dumb, stupid moron. Okay? And by the way, how dare you come out here and pretend that you can tell the world about Nvidia's financing when you are an author and an ideologist exploring money? F is that supposed to mean? I looked into your background. You are a logistics expert. You have no experience on Wall Street to speak of. And that logistics expertise has done you well. You were a successful CEO in a business that specializes in relocating dogs. That's how you use your logistics. Great. I hope that's $1 million business. Congratulations. But you know nothing about Nvidia's accounting, in my opinion, based on what I read. #1 rising in finance. Congratulations. That means you're just tricking more people into, by the way, you only got what? 3,000 followers. Congrats. But this article was garbage, y'all, and let me tell you why. We're going to talk about Nvidia. You want to say that the market crashed because of Nvidia, because AI analyzed Nvidia's quarter and decided it was not good? After all, bullshit. Okay, we had many things happen that morning. #1, we had a spike in the stock market, and the stock market's been fading every move. The food move got faded. So that's one thing that could have happened. We had a mixed jobs report, and a mixed jobs report will tend to make the market tank. And that's what happened. So maybe that was part of it. The Fed is now less likely to lower interest rates, and that tends to make the stock market go down, and that happened. So who besides God can tell us what actually made the market reverse course yesterday? Don't worry, I'll wait. Not me, I'll tell you that. And I've been doing this for 30 years. I earn 40% a year. I earn 7 figures per year. And I'm telling you that the proper answer to that question is, I don't know, stupid. Stop paying attention to these idiots. All right, let me show you exactly how stupid this guy is. All right, and this is great because you're also going to find out this is what happened on Nvidia's call. All right, so I'm going to show you the BS and then I'm going to tell you the truth. So we're going to learn about Nvidia right now, courtesy of this dumbass. He's talking about anomalies. So we're going to, right? Let's see. Anomaly 1, accounts receivable acceleration. Bro, I worry about little companies who have accelerating accounts receivable because it is a sign of a few things. One, more favorable terms, which is possible, late quarter shipping, which is possible, and you don't know who owes them the money. And so there's a risk that they don't get paid by those people that are accounted for in the accounts receivable. Accounts receivable is people owe us money. Do you know who owes Nvidia money? Microsoft, Google, Meta, XAI. You think they're not going to pay? These are the most flush with cash companies on the entire planet. Okay? So is it possible that there was more Blackwell shipments at the end of the quarter before the customers had enough time to pay for those shipments? Yeah, so what? Right? Is there a chance that Nvidia is being a little more liberal with their payment terms because they're dealing with the biggest companies on the planet? Possibly. Not a yellow flag. And I ran this by my personal experts. I've got a super inner circle of multi-decade Wall Street veterans who are also retired, semi-retired, or running their own funds, making 7 figures a year. Okay? And I consult with them every week to make sure I'm not flashing before I come and tell you a possible lie. I want to make sure that I got my ducks in a row. Right? Doesn't mean I'm 100% right, but at least we're damn close to it because we got a whole bunch of people with my level of experience, all right. A lot of them smarter than me, by the way. So this is BS, right? Let's not worry about anomaly number one because this is not a company that we should be worrying about their accounts receivables. I mean, it's crazy. Anomaly number two, right? Inventory accumulation. Their inventory went up this quarter. That's a sign of bad things when a company's inventory goes up. All things being equal, it is a negative sign. All right? And this is the problem with these idiots out there, is that they don't know the difference between a bullish raise and a bearish raise. They don't also know the difference, and you might not know this either, put it in your notebook. There is a bullish inventory accumulation just like there is a bearish one. A bearish inventory accumulation accompanies weak demand. We keep making this stuff quarter after quarter after quarter, and all of a sudden demand drops off, and all that stuff we made doesn't flow out of our inventory. And so our inventory becomes elevated, and Wall Street sees it and panics. That's legit. But Nvidia just blew out their numbers and gave higher guidance. There's not lower demand. Forget about the guidance, right? Because they could be lying about the guidance. But they just blew out their numbers. They didn't have to blow out their numbers by so much, right? They could have given us $1 billion blowout, and Wall Street would have been happy. Wall Street was increasing their estimates throughout the quarter because Jensen kept saying, demand is higher than I thought. Demand is higher than I thought. Demand is higher than I thought. And so they kept raising and raising and raising their estimates. The whisper kept going up. And then when the number came out, it was even higher than that. Does that sound like lower demand to you? No. No. And in fact, this dummy fail to tell you that if you ignore this right here, right, what you have is this was inventory 5, 4 and 3 quarters ago, or 4, 3 and 2 quarters ago. And then look at this spike. The spike didn't happen this quarter. It happened last quarter. This was the conspicuous spike, if anything, because look at how this looks. 3 flat bars, low. 3 slightly higher bars, flat and low. 3 slightly higher flat bars, low. 3 completely different shaped bars spiking higher. If there was a red flag, it was this right here last quarter. And you could have said, oh no, this is a sign that Nvidia is going to have a crappy Q3. And how wrong would you have been? Let's go to the chart. Again, all things have the right valuation, and Nvidia to me has an elevated valuation. I've told you before, I told you this, that it was a sell here, a sell for me, not for you, a sell for me, a sell for me, and a sell for me at these levels. And all 3 times have proven to be functional moves because Nvidia is basically right where it was that last time that it hit the red line 4 months ago. Your money could be doing other things in 4 months other than just being flat. We've had many winners over the last 4 months. So that was the right move, even if it hasn't really borne out in a declining stock price, right? And by the way, these lines can be wrong. I'm not God, right? Nvidia could keep going. I could have miscalculated how much this thing is actually worth, right? I was right. Back here at 42 is where this chart came in, and it went to 192. Well, I'm not going to take credit for all that. I think I got out at 142 the first time, and the red line, the last red line, was 169. That's a lot higher than 42. Back when people were telling me, this is a bubble, this stock is overvalued. And I said, shut up, dummy, you don't know what you're talking about. You don't have 30 years of experience. Not to boast, pat myself on the back, or belittle you, but at the end of the day, you do what you do for a living. And it is not it would be an insult for me to tell you how to change a transmission, to tell you how to do surgery, to tell you how to do what you do, because that's what you do, not me. So shut up. And if I try to tell you how to do what you know how to do, tell me to shut up. Call me a dummy. All right? But what we got here is Q2, right? Let's zoom in and so you can see what has happened in the last 3 months. Boom, we go back. 3 months ago, they report earnings, and the stock went up from those levels about 26%. Doesn't sound like a bad quarter to me, because it wasn't. So what explains this? Simple. You know what was going on here? This was the Hopper cycle, right? We're now in Blackwell. That's the name of their chip for those of you who don't know. Right? So in the Hopper cycle, we were at the end of the Hopper cycle. Remember, some of you who've been watching me for a long time, remember when I told you Blackwell is having a hard time getting their yields up, getting production up? And that's going to be a little bit of a problem for them. And it manifested itself in this downtrend in the stock. The stock was weak because Blackwell didn't ramp fast enough. Well, why on earth, if you are at the end of a cycle, Hopper is almost done, we're going to be making Blackwells soon, why would you be increasing your inventory dramatically of that old chip architecture when you got a new chip architecture coming? You wouldn't. And that's why these bars are low down here. Okay? But as soon as Blackwell ramped up in Q2, like I told you it would, you had a spike in inventory. Why? Because now we got the new stuff. We're no longer decreasing the amount of old stuff we have. And by the way, this was a mix of Hopper and Blackwell. So if we could actually break that down by Hopper and Blackwell, I bet you would have seen Hopper down, Blackwell up, Hopper down. And now Hopper is already down, Blackwell's ramping up, so the inventory ramps up. And then they have a great quarter and the inventory ramps up again. Guess what? That's probably a sign that Q4 is going to be another great quarter, not a sign of something bad going on. So for those who care about Nvidia, that's bullish. All else being equal, pay attention to the chart and the valuation. But if you're paying attention to the dummies out there trying to tell you what happened, more proof that you cannot listen to people out there without understanding if they are truly legendary level, multi-decade experts in what they are talking about. I've been covering semiconductors since 1994, folks. So it's insulting to me. I'm not here to tell you that you should listen to me and that I'm always right. Nobody is. So I'm not going to do that. But I am going to tell you that I know more than this clown trading dogs around the world. Keep trading dogs, Rover. Anomaly number 3, the spot market price collapse. Okay, what he's talking about is for third-party GPU compute marketplaces, right? So you need, basically there is demand to utilize GPU horsepower out there, right? Let's say I've got an app, an AI app, and it needs to run through an AI data center. This is why you see all these big monster hyperscalers coming out, because they rent out computing power, okay? And that computing power price did, like this guy says, collapse over the last few months. But here's the problem. He claims it's because it's a collapse in demand. I don't know about you, but first of all, I'm using AI more than ever. And for more AI compute intensive tasks, making videos, for example, as opposed to asking if why the sky is blue, right? But that's not enough. That's not enough at all. Here's the thing. Price is a function of not just demand, but also supply, you freaking idiot. And you should know this because you're a logistics expert. You talked about demand without talking about supply. And I just finished telling everybody that you didn't think about before that the supply of AI was constrained earlier this year because everybody was waiting for the Blackwell chips. So there was limited amount of supply because nobody wanted to ramp up data centers with Hopper chips when they could put in Blackwell chips. And when the Blackwell chips became available, boom, massive build out of data centers. That's more supply, which brings prices down, all else being equal. So this wasn't a collapsing of normal pricing based on a collapsing of demand. This was a normalization of abnormally high prices. He doesn't realize that the pricing for compute was elevated months ago. Not normal to collapse, but elevated to normalize. See the difference? Y'all got any questions? Put it in the queue. But I think this was a great quarter by Nvdia. And the only thing I don't like about it is that we've got an elevated stock price. If we came back down to these levels, right, like we got these opportunities to buy back at lower levels. We had a 27, I think, percent drop here, a 37% drop here, and we're back at these elevated levels. And again, I could be wrong because this stock could easily go right back to 216, which from here, what's that? That's a 20% increase. Not bad for a giant mega cap stock. Not what I do. I don't look for 20% moves. I look for 2 baggers, 3 baggers, 5 baggers, 10 baggers, right? So I'm not in Nvidia right now. I was when it was 42 because I saw a path to it being a 3 bagger or more, because of all the dummies out there that didn't realize how big this was really going to be. Mamma mia. All right, let's keep going so we can get to Q&A. We're still going to talk about some other stocks that have had pullbacks that give you the opportunity to get in if you didn't get a chance to do that the first time. By the way, and this happens over and over again with my picks, people get overzealous. Despite my disclaimers, despite the one thing that I am recommending to you, if I'm recommending anything, it's to not spike stocks on my word. Okay? Don't do that. You are acknowledging that you're not doing that. So I can do what I want with my trading activities. But you see time and time again. Okay? Here are my last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 official picks, plus my unofficial picks. Okay? Big returns. Average return of these picks. Oops, I had it and I dropped it. There we go. 14 picks. 1,400% cumulative return. That's easy math. 100% on average. 101% average on my last 14 picks, and that only dates back 18 months to just before my daughter was born. We have had no losing picks in this portfolio since my daughter was born 18 months ago. That girl is a lucky charm on more ways than one. So we're still rocking and rolling. So that just tells you that when you see a pullback in these names, that it's a good opportunity, in my opinion, on a long-term basis. That's how you accumulate and get in. On the dips. Buy on dips. Be greedy when others are fearful. Don't worry about what's happening next week. Stan Druckenmiller said, it's in my notebook. I have a notebook. Stan Druckenmiller said, look out 18 months and buy based on that. And he's the GOAT to me. Not Warren Buffett, by the way. Stan Druckenmiller, 0 down years, 30 straight years without losing money. Warren Buffett can't say that. Warren Buffett is most people's GOAT, and I won't, right? This is like LeBron versus MJ. I'm not gonna deny you if you think Warren Buffett is the GOAT. Cool. I think Stan Druckenmiller is the GOAT. And he says, look out 18 months. Warren Buffett will tell you to look out 18 years. All right, so at least do that. Don't look out 18 days. Don't look out 18 hours. That is not the way to become rich. Those guys are telling you for a fact, and they're billionaires. I think it might make sense to listen to what billionaires say. Let's keep going. We got other stocks to talk about. Okay, Gatekeeper. Speaking of which, okay, we got Gatekeeper. They pulled back alongside the market. They also raised money. I told you why. A bullish raise. And why? Well, we've got some estimates here, courtesy of AI, so we got to be a little cautious with it. But I looked at this, right? These are all of the transit authorities that are presumably need to comply with the FRA mandate, which is giving Gatekeeper all of this crazy business that we've seen them. $50 million of bookings in 5 months. That's a $120 million run rate for a company that is currently on a $35 million run rate. Okay? That's a near quadrupling of demand. Okay, and what is it from? Partly from these FRA mandates. Well, how big could this be for them? This $35 million company that now has a $120 million run rate on the bookings that they pulled in a 5-month period. Well, this is what AI helps with. Let's look at these companies. Let's look at the estimates, add it all up. One thing that I'm going to tell you, first thing I noticed when I looked at this list, the Long Island Railroad is not here. That's part of New York City, by the way. So it's not just it's the New York Transit Authority, right? And Long Island's a part of that. And Long Island already decided to give Gatekeeper $23 million deal. That's not in this spreadsheet. So this is clearly a spreadsheet of entities that have not yet awarded money. So we have to include, right, in that opportunity, those deals. What I also don't see is something that the CEO of Gatekeeper has already said publicly, so it's not insider information, but it is public, so it has to be true, or he's lying, and I've known him for many, many years, and he's not a liar. He's never, ever, ever lied to me once. He's got a $70 million deal in the pipeline. He's got a $100 million deal in the pipeline. I only see one deal in here that is 70 million, and I see none that are 100 million. So something's missing here. If the two biggest deals he sees are 170 million, then we're missing $55 million at a minimum from this spreadsheet. And what do the estimates come out to? 500 million, between $250 million and 500 million. And Gatekeeper has been winning most of these deals. From what I've seen, they are the market share leader in what I'm seeing here. So how much more business is coming over the next 2 years, less than 2 years, by the way, right? These guys have to award these deals probably within the next year to get in line for the deals to manifest in the equipment actually being put on their transit cars in time for the deadline. So we're going to see a lot more awards come out over the next 12 months, just like we've seen over that 4-month period where things went crazy for Gatekeeper, right? And it's a $500 million pie. So that was cool to see, helping to validate Gatekeeper saying they got 2 deals that equate to 170 million. By the way, those 2 deals, 170 million is just 1/3 of $500 million. So it kind of makes sense. Right? If anything, you would think the opportunity might be bigger if 2 deals is 170 million, and I'm thinking that the whole enchilada is 500 total. Okay, so nice continued validation of what we see for as the opportunity for Gatekeeper here, at a time where they raised money and had their stock decline as a result, just like what happened to Kraken back here. And remember, this buy is for me, not for you. But I put the little green circle for me and said buy for me to remind me that I got to be buying the stock after they did a raise. And you saw they did a raise, the stock went down, and then it went cuckoo. Okay? Only God knows if that's going to happen to Gatekeeper, but we're seeing the same pattern here. Is the stock ramping up, do a raise, come down in price, people panicking, oh my God, they raised money. And then from that level, the stock went up 184% in 7 months. 668% in 18 months. Ladies and gentlemen, that is a more, right? That is more than a 3-bagger. That's not a triple. That's not a quadruple. It's not a quintuple. That is like a 8-bagger. 7 or 8, 7-bagger. I'm not going to do math right now. It's Friday. It's a bagger. So that's gatekeeper. So if you didn't get your gatekeeper earlier because you saw it run, you didn't believe it, and slowly you were believing it, but by that time it had already run to 2.25, you're now getting an opportunity to buy this 33% off of those levels on a same pattern that saw crack and really take off from those levels. Next up, not AI. Let's pause from AI for a moment. We're going to get back to AI, all your charts, all your questions, etc. If you have any questions, put a question mark at the beginning of your question. If there's not a question mark at the beginning of your question, I'm probably going to skip it. I do read all the comments, and I appreciate the comments. Please put comments there because that also triggers the algorithm and lets other people know that there is somebody here giving you the real as opposed to stupid CNBC that only wants your eyeballs so they can sell advertising, that colleges that only want your tuition money and don't care what happened to you afterwards. Proof being this whole student loan crisis that we now have. What do the colleges care, right? This is business. This is capitalism unbridled. It's unfair, all right? This country is kind of failing us in this. I love this country. This is still my favorite country in the world. All else being equal, if I could learn any language instantaneously and live anywhere on the planet, United States of America is number 1. Okay? I think Australia is probably number 2. All right? That's the way it is. But the unbridled capitalism makes it so you've got companies like CNBC can pretend to be out for your well-being. Colleges can pretend to be out for your well-being. 10,000 financial bloggers out there can pretend to have 30 years of experience and be multimillionaire experts on technology. And they can get away with it. Stop that. All right? Spread the word that somebody like me is here. There's your commercial. I lied. They're commercials for myself. All right. Let's get this out of the way real quick so we can get back to AI. Saudi Arabia is looking to buy F-15EXs. If you know and have been following me, you know that that is good news for TPCS because that is one of TPCS's 4 major programs in which 91% of their business has no competition. They are the sole source for product that goes into Virginia-class subs, Columbia-class subs, F-15EXs, and CH-53K helicopters. So what's good for these 4 programs is good for Tech Precision. We see now General Dynamics expanding their operations, right? Electric boat, so that's good for Virginia and Columbia-class submarines. We see Trump losing his top over why don't we have more subs? What the F is wrong with you guys? Make us more submarines. The Chinese and the Russians are building subs faster than we are. Why? We're the USA, the greatest military on earth, and we're letting other people catch up. I'm not telling you if it's right or wrong to do that. I don't know if it's right or wrong to build more subs in this world, but they know better than I do. And if that's what they want, that's what they'll get. And that's good for TPCS, just like the F-15EXs and the CH-53Ks. And that news says more F-15EXs. By the way, this news suggests, if I'm not mistaken, that the Saudis want like 30 of these F-15EXs. 30. They can't make 30 in a year. In fact, this is my model. I don't see them, like, the Saudis have to get in line because they're getting to full rate production and then they're kind of stuck there. There's only so many they can make per year. The Saudis are probably going to have to come in over here on the back end. Like, something's going to have to give. There is so much demand for this F-15EX. It's a home run product, and that maybe they're going to have to expand production on this thing if you have so much demand. Now, they want to make sure that there's demand going out into the future. Like you see here, the CH-53Ks, I'm pushing those 20s out into the future. I might have to, like, put a 30 out here. Let me see, Control C, something like that to account for what's going on with the Saudis. And that makes these numbers more sure. All right, enough about that. We like TPCS, of course. And you see the pullback there, right? We all know what happened when we got to the green line. It was a great buy. Got to the green line. It looked like a bad buy because it crashed from there, but not so fast, because those who bought at the green line got 100% return. Even if you held all through this, you still up 35% in 9 months. That's 48% annualized. And then if you were watching the show with your notebook and remember when I did the clear out trade, that was me. Right here, this little circle right here was me buying a bunch of shares from the seller that was pressuring the stock. I said, how many shares do you got left? I will buy them all because it's just too cheap. We're below the green line. I want your shares. He said, this is how many shares I got left. How much do you want for them? He gave me a price. We negotiated. I bought them out. Now there were no more shares. And from that point, I told you that I did that. Boom. Clear out trades are undefeated. I have never lost money on a clear out trade. There has never been a time when somebody was desperate to sell a bunch of stock and was just throwing it out there in the marketplace, panicking people, where I come in and say, how many shares do you have left? I am going to stop this madness. I've never lost money on that. Never. And this continues that trend because I bought in, what did I get them for? I think I paid $253. I bought some down here too. I was buying all morning because of that craziness. I was going to buy all his shares at 252 or 253. I forget which one. It was one or the other, right? But I was still buying all the shares that was going down below that because I want all those shares too. Bought them out and boom, here we go, right? 147% gain. That's 683% annualized. So boom, it's easy. This game is easy. Just keep it simple. And we're approaching the 200-day moving average, by the way, on this one. Okay, that's TPCS. IZEA, for those who missed it, they had $8 million in revenue. I talked about that last week. They got new business from Amazon, General Motors, and Owens Corning. I think you know all of those names. Maybe Owens Corning you don't, but you definitely know their products. Okay, for sure. These are household names. They also have these customers. Their customer base is now significantly better than it was under new management. And I mean, like they signed GM and Amazon last quarter. Like this company is going places, right? So long-term view, you know what that is. The short-term view, I gave it to you earlier in terms of how to be playing these things, right? You got the long-term lines, you got the short-term lines. Boom, right? And these are your opportunities. In fact, I might jump in and buy some of the stock before the end of the show. There are definitely stocks that I'm going to buy before the end of the show. We're going to end Q&A at 3:55. So if there's any outstanding other opportunities, what other ones? One that I think I might have gotten my fair share of this morning, Curiosity Stream. One of my in fact, this guy is way better than me. Like, you think I'm good? You think I'm experienced? This guy is more experienced, better educated in the fine art of stock analysis. Like, he's better than me, okay? If you think I'm the GOAT, I'm not. Proof of that is this man's existence alone, all right? Met with the company. Everything is everything that I told you it is. Okay, this company is doing great things with AI video, enabling AI video with the LLMs, licensing content, being the middleman, the broker for video content that is enabling the hyperscalers to become a greater threat to Hollywood. That is big, right? The whole idea of being a major threat to Hollywood is crazy. When was the last time you heard of anything being a threat to Hollywood? Me? Never in my entire life. Bollywood, maybe. Right? So, this is a major opportunity. You've got the hyperscalers all over it. They are licensing AI content. And so to see Curiosity Stream drop from 7 down to 4, and then, hey, who was the dude that told you to buy it ahead of the quarter? because of all that crazy stuff that was going on. Check my tweet for proof. And the stock popped 28-30% on the news. But the traders, they sell the news. And this thing is pulled back off of there. Not all the way, right? But if we go back and look at where the stock has been over the last few months, you can see that the panic that has engulfed investors since the last time they announced earnings, since the stock was $7 a share, still hasn't reversed itself. This company has made progress, but the stock is still down significantly from where it was the last time we heard from them. So we've got a company that has done more, but is priced, not worth, less. Remember, there's a difference between value and price. And the gap between value and price is where millionaires and billionaires are made. Okay? I don't just want a company who's going to grow, because that's nice. I can buy a stock that's fully valued, like Nvdia, right? And by the way, there's nothing wrong with buying Nvdia and putting it in a closet, because the stock's trend lines are growing at 20% a year. So all else being equal, if you wait, right, until the next time in the future where the stock gets to the red line, and it can just stay there, it can just climb up the red line, it could go above the red line. But if the stock goes all over the place here willy-nilly, and then somewhere in the future, right, gets back to the red line, you will have made 20% per year for buying it now. It's not bad. I'd rather buy it here, because if you buy it here, then you're making more like 40% a year for waiting until it gets to the red line in the future. That's the difference between buying something for growth and buying a value that also gives you growth, right? So you got to find the best values at the best price. They're not the same. Okay. Wow. Before 3 o'clock, we've got to Q&A. Not so fast, though. See, we just talked about Curiosity Stream. Let me see if there's anything else. We talked about, circular deals. If you guys want to hear about circular deals, make a question. Say, tell me more about the circular deals. We've already talked about it. To me, it's BS. This is not a bubble. It's a build-out. There's a difference between a build-out and a bubble. We are moving from a CPU world, Intel, to a GPU world, Nvidia. And when you replace something with something else, you're going to have a build-out. And eventually it normalizes, yes, but that doesn't mean it's a bubble that burst. That's a normalization of a build-out. And when we have the normalization of this build-out, I do expect AI stocks to drop from that point. I just don't know when the build-out is going to be done, because this is what will likely to be a multi-trillion-dollar build-out, and we have not had multi-trillion dollars of spending as of yet. We have more quarters, at least, of strong AI spending to go. AI is not a bubble. So that takes care of that. We talked about Curiosity Stream. We talked about Gatekeeper. We talked about IZEA. We talked about Intermap and GeoDrill. I like them as well. Same deal. Same thing I said, pullbacks. Look, getting down to the 200-day moving average here was a great buying opportunity. Even with the market going down, buying at the 200-day moving average has you up 13%. The market is definitely not up 13% recently. In fact, we're in correction territory for the IWM, because from the peak, the IWM dropped not quite we got to 9.44. By the way, this is what the computers do. The computers, if they determine that it's just a correction, they will, just before we get to minus 10%, they step in and buy. I've seen this many times, 9.44, 9.58, 9.28, down, then you see buying come in, and we saw the buying come in. Now, is this spike going to be the last, before we keep going and take off? I don't know. If anything, I would, maybe fade that move a little bit on the indices. So as I'm buying stock, I am also adding more RWM to hedge. Like you can short IWM or you can buy RWM, which will do it for you. I've talked about that in my videos and in my instruction manual. Everything I said at the beginning of the show, right? Listen to the recording, read the article, watch the video, and you'll understand everything that I'm talking about. The veterans know, so I'm not going to belabor the point. I'd rather get to Q&A, which is just about where we are. We got one more stock, and this is AI related as well. IDN. This was another name I gave y'all. This is another name, and this stock went up 50% on earnings. Look at that spike, y'all. Okay? This is not day trading. This is fundamental research. I told you they were going to have a good quarter. What I didn't tell you, because I didn't know, and I would have never guessed it, this quarter made the stock go up 50%, 55%. I got out on that news. I took it out. For those of you who didn't catch the news, it's out of my official portfolio at this moment because I didn't think it was a plus 50% quarter. Regardless of all the content, all the good news, it was a good quarter. Very good. Very good news. I like it. I like the company. There's nothing but here's the problem. There is a price, the right price to pay for everything. And I did not want to pay 55% premium for that particular quarter. 20%? Sure. 25%? Maybe. But not 55. So I took my profits. As of Monday, I will own 0 shares of IDN for sure. All right. I hedged out. I sold some. I hedged some out with call options, etc., etc. It's all gone. It's disappearing after the close today. What I got left on IDN. Could it keep going? Sure. Maybe I'm being too cute. But here's the problem. We're in Q4. Okay. And in Q4, what a lot of people don't know because it's not in their notebook, IDN is going to rely on the retail sector for about 30+% of their revenue. And so far, the retail quarter is not going well. Okay? There's a lot of data points that validate this. So that runs the risk of IDN's quarter. I don't think IDN's quarter is going to be as good as this one. That's my prediction. I'm not going to say it's going to be a bad quarter, but it's not going to be a repeat of what we just saw. So to me, and we're not going to see them announce this quarter until maybe March, and it's November, and with all the fears in the market and the elevated stock price and blah, 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 and the chances that the quarter is let me take a vacation. Let me take my money off the table. That was my decision. You can make yours, okay? But there you go. But I still like the company, and my risk reward chart still looks like this. All right. It's just I think that the stock is giving us an opportunity to take profits. I could be wrong. All right. And I'm not telling you what to do. I don't make buy or sell recommendations, but let's go to Q&A. And again, if you love what I am doing for you guys here, give me the thumbs up. All right. It's not hard to do. You just take your finger and you press on your screen. All right. That's while I'm talking. It's not much to ask for. I know some of y'all are driving, so don't crash. Give me a thumbs up. I love all the hellos, by the way. Thank you very much. I love that y'all thinking of me, putting those comments, helping the algorithm. So boom, thumbs up to y'all for that. Let's get to the first question. I do read all of these comments immediately after the show, by the way. So please put them in there. By the way, do not pimp your stock. For you newbies, the veterans already know. Do not pimp your stock. This is my show, not your show. Go make your own show. And do not troll me because it doesn't bother me. It makes me pity you. Okay? I will think you are pitiful. I'm sad for you that mommy and daddy didn't give you the love you needed. And so you take it out by trying to hurt other people, and you take joy in other people's hurt because you have a hurt heart. It doesn't work on me. It makes me pity you. I feel bad for you. I think somebody who wasn't loved by mommy and daddy is somebody to feel bad for. Okay? So you're going to get my pity, and then you're going to get kicked off my show, and you'll never say anything again. So if you are pimping your stock in my chat, this is your chance. Click on what you wrote and hit the delete. If you are trolling me, click on what you wrote and hit delete, and everything's good. I don't care if they're trolls on my show. They just can't speak. Let's go. When GSI started trading below oh, okay, here we go. GSI is a gatekeeper, by the way. GSI is the Canadian symbol, right, on the venture exchange. When GSI started trading below the PP of 210 Canadian. I started wondering if the market knows something I don't. Can you educate those of us who are new when a stock dips below the PP? The PP being they did their offering at $2.10 Canadian. That was what they did their offering at. And the stock broke the deal price. And what he's asking is, does somebody know something? This is the first time I'm seeing you, Keepale. I don't know how to pronounce that, so no disrespect meant. Get a pen, get a notebook, and write this down. And the rest of you do the same. I've answered this question many times. Nobody knows nothing. Nobody ever knows nothing. That's a rule. It's a rule. Nobody ever knows something. Wait a minute, Mark. Somebody knows something sometimes. There's always somebody that knows something. That's true. But there is no way for us to determine if somebody knows something in any given situation. And because over 90% of the time, nobody knows something. I've already shown many times in the past the Salesforce.com chart. And how many times people said, does somebody know something? Does somebody know something? Does somebody know something? See each of these circles? Every single one of these circles was somebody saying, does somebody know something? And every single time, if you bought, and there's even a circle missing right here. Every single time, if you bought the stock, in that does somebody know something moment, you made money. 1, 2, 3, 4, 5, 6, 7, 8, 9 times and running. If the next time it turns out somebody knew something, that was 9 out of 10. That's 90% of the time. If we play heads or tails and I tell you that we're using a coin that's going to be heads 90% of the time, are you going to call tails? Ever? No. You call heads, heads, heads every single time ever. Never, ever, ever, ever say tails. But wait a minute, 10% of the time it's going to come up tails, so you should guess tails sometime. No, stupid. No, stupid. You never. Because only God knows when it's going to come up tails, and every single time it's a 90% bet in your favor, so why would you take the 10% bet? Never do that. Okay? That's your answer, my friend. The reason why the stock went down below the price, probably because the market tanked and took it there. But you see buyers stepping in, right? And the market might tank it again. Who knows? That doesn't mean anything. That just makes the stock cheaper. The difference between value and price, all right? We have extra time today, so I wanted to give that lesson one more time. No offense, I don't mean to mock you because it's a first-time question asker. It's a good question for those who never heard it before, the answer. Hope you are well. Following the GeoDrill earnings call report, do you suspect the customer buying additional drills being ATXRF, especially giving the attention to copper? Warms my heart to see you guys out there evolving, sprouting out from the dummy mud and becoming the intelligent. Okay? This is what I'm talking about. Yes, my friend, yes, you've been paying attention. You've been taking notes. I talked about in the past ATXRF being an exploratory copper company. I was good like this. And a customer of GeoDrill, and getting to the point where they are, in my research, this is not coming from GeoDrill. They're not going to tell you that because it's a customer, but I go and do my own research and find out that Atex Resources is multiplying how many drills they have because they are ready to pull copper out of the ground finally. So we now have a multi-year runway of this company right here doing crazy business. In fact, GeoDrill told us on their earnings call, we are no longer nearly 100% gold. We are 20% copper because copper is like the new gold out there. You know, copper is helping to run AI and stuff. And Chile is the Saudi Arabia of copper. And Atex is in Chile. and they are going to be mining for copper, and they need drills to do that. So good homework there. Outside of AI, what types of companies do you think? By the way, I don't own Atex Resources. I don't think I own any right now. It's like a $500 million market cap. It's a commodity stock. You know, that's not my wheelhouse. I'm a technology analyst. Yes, I stray, you know, when I see opportunities, of course, right? Because copper is important to technology, so it's peripheral. Geodrill is important to that, so it's peripheral. So we do that sometimes. But 500 million, and I have to understand copper in the ground and what it's worth and how a mining operation works. We've seen that hurt people before. One thing for sure, if they're going to try to pull copper out of the ground, they need geodrill. That's an easy thing for me to understand. How much they make off of that, who knows? So geodrill's the low-hanging fruit there, not Atex at this moment. Although you see this pullback, right? So I have owned this stock in the past. So all else being equal, this is a nice point. 200-day moving average, pull back to the low end of the channel. Beautiful. All right. I'm not going to be mad at it if you do that. Outside of AI, what types of companies do you think will be the next to explode? Well, that's what I'm here to talk about, MJ. And you've been on this show before. Excuse me if I'm wrong. All right, I've seen an MJ96 here before. It's slightly different looking than this. If you're the same one, shame on you. All right? Don't ask me those questions. I'm here to give you that information every week. I come out here and puke every bit of knowledge until I have no brain left at 4 p.m. And what else do you have to offer me? Shut up. Looking for undervalued companies and overlooked segments of the market. That's what this show is about, stupid. Is this not what the whole show is about? For me to give you undervalued companies and overlooked segments of the market. Get the F out of here. Yeah, come on. Dummy of the week. Dummy of the week alert. Let's see if anybody's more stupid than MJ this week. Loaded up on GSI and Nvdia. At what age did you feel safe to retire from your job and only invest? I don't talk about my personal life like on request. Like, that's not a question about stocks that's going to make everybody money, okay? But I will answer quickly. I had multi-millions. Like, I had a number in my head. From the time that I graduated college, I said, once I get up to X number of millions, that's when I'm going to retire. And I hit that number when I was 38 and I retired. Okay? I had told all my customers I'm closing my business. It was only 4-year-old. It was a 4-year-old business. It was generating 7 figures per year, but I had all the money I need for the rest of my life, and I didn't want to wake up every single day and run a business. I wanted to wake up every single day and sit on a beach in Cancun, which is exactly what I did. I told them I was going to retire. I'm going to go to Cancun. I went to Cancun, and they said, that's cool, Mark, but we're going to keep paying you because we know you're going to keep picking stocks for yourself. Just give us the picks that you make for yourself, and it's all good. We won't ask you for all that other stuff you do. So I said, cool. And the money kept flowing. It was 2008 when I told my customers I'm closing up shop. In 2015, I kicked the last customer out. All right. So there you go. You want to, like, don't be lazy. Build up a big stack. I mean, truth be told, maybe I should have kept the business going an extra year or two, because then I'd had an extra couple of million, which might be an extra 10 or 20 million now, because money multiplies. And who doesn't want an extra 10 and 20 million? Let's see. We got another personal question. I am skipping it. He gave me the permission to skip it. We got a question where the question mark isn't at the beginning, so you go to the end of the queue. You got to put a question mark at the beginning of your question, or I'm not answering it. SNES chart, please. SNES. Beautiful chart on SNES. Speculative stock. Still in the first inning. Pen, paper. During a yellow alert, don't own speculative stocks. I own some, but it's like a fraction, like a little tiny fraction of 1% of my portfolio. If you take all the leftover speculative stocks in my portfolio, it doesn't even add up to 1%. Okay? So keep that in mind. The rules are smarter than Mark. The rules say no speculative and no wait time stocks during a yellow alert. And this one qualifies as both. We're waiting. It's better to show up in the second inning than to get rained out. This one is in the first inning. I like this stock. I like this opportunity. But in a market like this, it's going to get smashed, is the rule. And guess what? Money Mark's rules were right, because from those high levels, this stock is down 60%. Anybody who loaded up on this stock on the promise of the stock going to 50, which I think it can do, but it can only do that if we get into the second inning of this ball game, and we're not close to that yet. So I own a little bit, right, for the long term, but from the short term perspective, when we hit yellow alert, I was out. A lot of this out. Mark's going to follow his rules. That's what the disclaimers are for. I need to have the license to do whatever I want anytime. Otherwise, I won't do this show. And I got out. And I told y'all. I've told y'all all along. This is a speculative stock. It's a yellow alert. Y'all know the rules. And if you looked up the rules, then you knew what to do. I didn't have to tell you. I see a dollar sign, not a question mark. Hey, Mark, do you feel that Motorola's purchase of Blue Eye will have any effect on Gatekeeper? Nah. It's a good question, but nah. It's a sign of consolidation in the space. I wouldn't be surprised if Gatekeeper gets acquired, given what's going on out there, because you got Motorola, Hitachi, you got Alstom, the second biggest train manufacturer in the world. Like, a lot of these guys are partnering with Gatekeeper right now. There is so much demand out there. Okay, and by the way, Motorola, even if Motorola bought every one of Gatekeeper's competitors, Motorola only has a portion of the market. That might actually turn out to be good for Gatekeeper, because then everybody else would only have Gatekeeper to partner with. And then Gatekeeper ends up with all the market share except for Motorola's. Right? So that can end up being a positive for them if that happened. So I'm not worried there. Last week you didn't get a chance to talk about GeoDrill's customers. I just did that. What's up, Mark? Pertaining to RWM, SH, and other inverse ETFs, do you have a strategy for how long you hold these to optimize the effectiveness? Yo, that is like a $64,000 question that I can never answer effectively, okay? When we get to yellow alert, it's a great question. When we get to a yellow alert, if you look at the Qs, for example, right, and I shorted the Qs, and I shorted IWM, right? And we're making money on that short, right? From the yellow alert levels, because now the market has finally dropped off dramatically, as it almost always does in a yellow alert. Eventually, it sometimes takes months, but eventually it will crash out because the valuations are high. How long do you hold those hedges? Well, there's a couple things, and this is more art than science. There's a few things you look at. As we get down towards the 200-day moving averages, then I want to lighten up on those hedges. As I start to find that the stocks that I own look so cheap that I don't feel like I need a hedge anymore, like this stock is so cheap now that I don't need insurance against the market making the stock go down even further. And if it does, so what? I'll just buy more of it. That's the kind of art that you need to think about as you are figuring out how much to hedge. But for sure, at the 200-day moving average, you want to trim your hedges a little bit. Certainly, if the market goes down 20%, you want to trim your hedges more. And historically, and shout out to UBS for teaching me this the hard way over and over again. If the market is ever down 30%, don't wait for this green line. This green line almost never happens. Look at this. It happened in 2002. It happened in 2008-9. It happened in COVID. The only 3 times in 25 years. For some of you, that's your whole life. For me, it's almost half my life. Yeah, I'm about to turn 55, folks. 3 times in half your life. This is 3 times in my whole investing career we've had an opportunity to buy on green. Okay? It happens a lot in our stocks, but in the stock market, it's rare. Okay? The Qs only twice, dating back to 1990 when I was still in college. SPY only twice since I graduated high school. Okay? You want to take advantage of the 20 and 30% pullbacks because eventually the market is going to go back to the red line. And now you have a 20 or 30% head start. For a market that's down 20% to get back to even, has to go up 25%. Oh, that's a nice juicy discount. For a market that's down 33% to get back to even, has to go up 50%. That's a beautiful discount. Okay, so that's the way you want to look at that. Let's keep going. Uh-oh, lost my place. This does this recently. Here we go. Are you aware of any efforts for Gatekeeper to list on the NASDAQ? I think they are thinking about it. And I don't just think, I believe, I know that they are thinking about it. Let's put it that way. How do you go about taking profits on your hedges? That was it. There we go. Answered already. AHR. Our old friends AHR. Will you please pull up your model on, oh, wait a minute. AHR. Any concerns that there is no Fox XP news? How much importance do you give to them PRing something in the next few months? I mean, yeah, we want to see that happen, and it's going to happen in due time, Sergio. It doesn't freak me out if we don't see it in the next few weeks or months or anything like that, because these are giant companies making giant decisions. This thing, one thing you got to realize and understand, put this in your notebook. A semiconductor company that needs better testing solutions like what AHR provides doesn't just go out to Amazon, order some AHR equipment, and it shows up at their door 2 days free shipping later, and they plug it in, and all of a sudden they're testing their semiconductors. No. It is way different than that. These fabs are constructed and they're like highly detailed, architected. Every piece of machinery, where it goes, what the environment looks like. You have these clean rooms that have immaculate like standards for how they are arranged and how like nothing can get in there. They're like the most sterile places on earth, right? You can't just swap out what you were using before with something that you want to use in the future. You have to get to the point where you're ready to reconfigure your manufacturing operations, and then you do what's called designing this in to the future, right? And that's why when I gave this buy for me, not a buy for you, level here with AEHR back here, it was because it was clear to me that Tesla, well, not Tesla, On Semiconductor, at the order of Tesla, was going to design AHR into the future of their manufacturing processes. So that order that they got from On for Teslas was not going to be the last. Absolutely no way was that going to be the last order. We were going to see a slew of orders, and we did, and the stock went from 2 to 52 over time. Okay, the same thing happens here, so we can wait. We can wait for the second inning. I'm not worried that the game isn't going to start, but I'm going to wait until the game starts before I get too excited. I own AEHR, but my truck is not backed up on AEHR because I want to see the larger systems sell. So far, it's the smaller systems, the lower price systems that are selling to these AI customers. And I warned y'all about this, and you see the stock pulling back. People are like, why is the stock pulling back? They've been announcing orders. Not the kind of orders that will justify, right? Because I said AI Goldmine when the stock was 7. And the stock went to 37. There's the right price for everything, price versus value. This was a great price at a great value at 7. At 37, it had gotten ahead of itself. Now we're back at 20. I've sold some puts. I own some stock, blah, blah, blah. Right? I'll probably own some more stock on Monday because I sold some puts that are going to probably exercise today. I think, to my recollection, don't quote me on this. Right? But my truck isn't backed up. I'm waiting for that Fox XP order to tell me game on. Now the game has started. We're in the second inning. Enjoy the rest of the game. Mark, will you please pull up your model on Gatekeeper and what you expect from earnings next month? No, that's not how it works, Thomas. It's a fine question, but my models don't predict quarters, if you didn't notice. I mean, sometimes they do, but what do we got here? Oh yeah, I had before the TPCS model, right? I mean, I've got a quarterly model where I plug in the numbers that they give us, but my model is an annual model. I'm following the rules provided by the GOAT, Stan Druckenmiller, looking out at least 18 months on what a company is going to do so I can make an investment decision. So you see, I have annual models on companies and what I expect them to do. With Gatekeeper, I don't have a model on what I expect them to do over the next couple of years. It's hard to ascertain because they're only doing 30 something million in revenue right now. We got just one mandate. The FRA mandate is one of many mandates in the US and in Canada. FRA is just US, by the way, right? So we've got multiple mandates with an unknown quantity of value exploding over the next couple of years. I'm having a hard time figuring out how big are the opportunities, adding them all up, figuring out how much of Gatekeeper's market share will be in each one of those opportunities in order to figure out how much revenue I think they're going to generate next year and the year after. I just know it's an effing lot. And that's enough for me. It's a lot. It's a big number over what they're doing right now. So I don't know what they're going to do in Q4. And frankly, I don't care. And neither should you. It doesn't matter at all. Like zero. In fact, they could report zero. In Q4 revenue, they're not. That doesn't happen. But I'm telling you, they could report zero, and I might be a buyer on whatever dip ensues. In fact, I would definitely be a buyer on whatever dip ensues, because I know that the future, next year and the year after, following Druck's rules, look 18 months out, not 1 quarter out, and certainly not 1 quarter in the past, which is where we are right now. What they're going to announce is something that already happened. We're taking a look at the future. This is why I don't typically talk about quarters unless something extraordinary happens or if I happen to have knowledge of it. So don't ask me about a quarter, because I'll tell you about a quarter if I know about a quarter, but most of the time I don't. It was an okay question though. Oh, Josh, don't do that. You're a newbie. You asked a question about a stock I don't cover. I told you not to do that, but at least you're not pimping yourself. You're not pimping your own stock. You're asking a question about a stock I don't name. So I can't help you there. 338 people watching and only 146 thumbs ups? Is that real? Is that true? Come on, y'all. Are half of you not entertained enough to give me a stupid thumbs up? Come on, y'all. Give me the thumbs up. Give me the thumbs up. Give it up. Give it up. Give it up. There we go. Let me see. Let me check to see if this is accurate. Oh, we're up to 224, 225. Okay, come on, bring it. Hook me up. I'm hooking y'all up. Next question. Could someone ask, thanks Gorilla, by the way, could someone ask a contact in Indonesia their opinion or recommendation on Intermap for other mapping projects to get a feel for their chances at phase 2? Nah, that's not going to happen. You could, right? I mean, back in the day, one of my jobs was to extract information from people, legally, by the way, right? So I would pay people for legal information. I would accumulate little pieces of legal information that added up to illegal information. Sorry about that. Trying to get a little lunch in here. I would take people out to bars. I would actually go out to bars and just try to overhear what people are saying out there in public. I would sit in parking lots and see if the salespeople are coming out at 5 o'clock, high-fiving each other, or still in the office at 11 p.m. on the last day of the quarter. By the way, bearish sign, right? Things like that. I don't do that anymore. I don't need to. We make money easily enough using these red and green lines. Do I have a Discord? That's a great question. Thank you for asking, but I don't. Do you? I don't do all that stuff, guys. Come in here 2 hours a week, just like this. It's easy for me to hit a button and go live. I also go live if you follow me here, right? At Money Mark Stocks on X. I do go live on Mondays for an hour as a guest on a show. All right. Let me see. Did we get up to 8,000 yet? Ooh, 79.90. Come on, y'all. We need 10 more followers to get to 8,000. Can we do that by the end of the show? Let's keep going. How do you preset your stock screener when you are searching for new companies? I don't have a stock screener. No. See, this is the thing. Stock screeners, AI, formulas, stock screeners, AI, formulas cannot pick stocks. Okay, you might think they can because you see this screen gets a 12% return per year. 12% per year. I want a triple. Where's the screen that finds triples? It doesn't exist. Because if it did, everybody would be using them. I go to investment conferences. I check out online conferences. I go out those until my baby was born. Twice a year, I'd go to LD Micro, shout out to Chris Lahiji, and meet with literally 20 companies in 2 days and hear what each one of them has to say. Mark, that's a lot more work than using a screener. Yes, mother effer, because it takes that kind of work to find great picks. A stock screener would not have found Gatekeeper, would not have found Kraken, would not have found a lot of these companies because I'm looking at these companies from the standpoint of I like companies that aren't profitable or haven't blown up yet. And a screener doesn't know when a company is ready to blow up because it's a business. Customers buying product determine when a company blows up, right? We can all agree on that. So how could a stock screener tell you that customers are buying their product suddenly in the future when it hasn't happened yet? A stock screener is operating off of past information. I'm operating off of future forecasts based on what I see in terms of demand in the marketplace, trends in the marketplace, my knowledge of technology, my contacts in that industry, etc., to make educated guesses as to who might blow up next, and then not buying those stocks, but monitoring them to see if customer demand does indeed evolve, waiting for the second inning. And then when I see that happen, boom, in air, I strike. If it doesn't happen, and this is the thing, y'all don't see all the stocks that I say, nope, 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 pass, pass, pass. For every one stock you hear about from me, there's probably 95 that I've said no to. Okay? When is Gatekeeper's earnings? You can look that up. That's a lazy question. I don't care if you're new or not. Do not ask me lazy questions. That's dumb. That's stupid. That's moronic. That's horrible. That's lazy. That's selfish. Because you, one of 300 people on this live, want to know when Gatekeeper's earnings are and are too lazy to look it up on the internet that you want to interrupt the whole show for you? For you? Special FOTINNID, whatever you shut up. What an idiot. See, this is what's wrong with people. This is what's wrong with some people. You think you're entitled to have Mark, I'm hungry. Can you make me a hamburger? And out of the goodness of my heart, I make you a hamburger. Can you put it on a plate for me? This motherfucker here wants it on a plate. Here's a hamburger on a... Can I have some ketchup? Can you put it in my mouth for me? Can you move my jaw for it? That's what you're doing right now. As stupid and idiotic as that sounds to you, that is how stupid and idiotic that question is to me. How are you going to become a millionaire when you rely on other people for information so simple as that? You won't. That's the answer. I've made... And by the way, for those of you who are newbies, just realize that's the coach a-hole routine. That's the dummy routine. All right. It's nothing like I'm not really an a-hole in real life. Well, yeah, I am kind of. But, this is just for entertainment to keep people laughing, So I want to thank all y'all who get the dummy routine for being good sports in everybody here. It's Friday, right? We've all had a hard week. We're entitled to a good weekend up ahead, and this is a good way for us to let off some steam by I'm letting some dummies know, because a lot of dummies, we've all had dummies this week. This is me, right? Giving y'all the personification of what dummies deserve. So thank you to the dummies for being our punching bags. I've made several money on several buys and sells, but are your friends still thinking ARAAF is a value at these levels? Yeah, nothing's changed about that, my man, but I never made it an official pick. I warned you that it was a trade with speculation, speculative, that we'd continue to see, right? I said, if you like MP, if you are in MP, I would rather be in ARAAF, right? And that turned out to be correct. But the hype, right? The hype around rare earths reached a peak, and the stocks are pulling back off of those levels. I'm not covering this stock. I will not cover this stock going forward. It was, y'all requested me to tell you about more names that aren't official picks. I'm doing that, but you can't hold me to covering those stocks. But sorry, it's an okay question, but yeah, man, I'm not in these rare earths anymore. It got to a certain level. We saw the chart break, and as soon as the chart broke, right, that was the sign to get out of these things, because the day traders and everybody else was certainly going to follow suit. And you could see right here, it was a very clear break of this technical pattern that was very nice until it wasn't, right about there, and then boom. Does Gatekeeper have the capacity to ramp? Yes. This is a really good question, actually, MBJ, because I answered yes to that before, but as it turns out, right, this is the amazing thing about what happened to Gatekeeper, is that they made it clear to me that they had what they need. They had all the cash they need, $8 million. That's a lot of money for a company that only does $35 million a year. Okay? $8 million of extra cash to ramp up their capacity and stuff. And they said, this is enough. And then all of a sudden it was like, no, it's not enough. We need more money. There's only one reason they did that, is because the demand is expanding faster than they anticipated. Okay. So maybe they don't have the capacity, but if they don't, MBJ, that's bullish, not bearish. Kraken didn't have the capacity they needed either. Okay. And we all saw what happened to that from this level. They didn't have the capacity down here. And the stock went up 7x, 8x. Question about conference calls. I listened to the SNES conference call. At the end during Q&A, there were no live questions with follow-up, just a list of questions being read. Is this unusual? Now, that happens a lot of times in small companies. It's no big deal. And don't read into it if there are no questions on an earnings call. Okay? In fact, I kind of like that. That means that there aren't many smart people paying attention to this company. And that means our competition for intelligent investors is low. That's what we want. We want there to be nothing but dummies looking at our stocks, right? Because then we get to load the boat, and then I release these reports, and hopefully smart people read the reports and form their own opinion. Do not buy the stock because I think it's a good one, or long term, this, that, or the other. I don't want to influence the markets, but the information gets out there, and then there's price discovery, right? And it's that price discovery that enables us to make a lot more on these stocks than just a typical growth. Like the CAGR, compounded annual growth rate, of Kraken is presumed to be 23%. All else being equal, you should only make 23% per year on this stock. We made hundreds, right? 200% on this stock, not 23%. We made almost 10 years of earnings on this stock in one. That's because we were taking advantage of poor knowledge in the marketplace, which comes partly by there not being questions on an earnings call. Speaking of CNBC doing what you called made you look, can you talk about CNBC's article? No, I'm not going to do that. I'm not going to talk further. I spent 45 minutes of my life last night looking at that stupid ass article, right? This is a rule in the notebook. Do not pay attention to what people are saying out there. 99% of them are dummies, are idiots. And unless you know which 1%, how many people do you think went and looked at the background of the guy on that Nvidia article? Probably one. Me. Because I know that's a rule. Remember the rule I told you? Make sure that when you are dealing with somebody that you get their real name. There's mine. That you get their real credentials that are verifiable. There are mine. And their real-time performance tracker. There's mine. Where is everybody else's real name, real credentials, and real-time tracker? My credentials don't say dog transporter. They say Director of Investment Research at AMR, a globally recognized blah blah, but you can read the rest. Okay? I've been in computer world, IT world, information age. I was credited with the #1 stock pick by CNBC back in 2013. 2013. I was the one that provided the proof that sparked Hynix to going to become the greatest technology stock of 2013. I was credited with that. Okay? And that's not to boast. I don't come out here and tell that story every week, pat myself on the back. I'm not resting on my laurels. That was 12 years ago, Jack. But no, the 99% of these people can't say that. Have they been credited with anything like this? No. And yet you're still watching CNBC. You're still reading these dumb articles because it's interesting. It's interesting, but it's clouding your brain with stupidity. It's hurting your performance because you should only be paying attention to legends and industry experts with great track records and great pedigrees. And if you did that, you would cut the amount of stuff that you ingest by like 95%, and you would feel better, you would do less work and make more money. I do less work and make more money than I used to when I had a business. Mamma mia. How many times do I have to say it? Question on PayPal. I don't cover PayPal. Do you have a chart for Google? Everybody has a chart for Google. I've said this a million times. You might be new here. You look new here, so that's okay. I'm not going to give you the dummy treatment. But with a long-term mega cap stock, really all you have to do in most cases is just draw a line over the tops, make a parallel line or a line under the bottoms. You see these, that's why these lines are white and gray, because they're technical. But most of the time, technical lines on a large or mega cap stock will tend to be reliable because you have 50, 100, 250 Wall Street analysts, Harvard MBAs in three-piece suits on the 32nd floor of a New York City building, spending 70 hours a week, all of them, researching these names, right? So what are the chances that they all get it wrong? The chances are there, but it's not like the market goes up. These guys pick stocks at a rate of 10, 15% a year. That's nice. It's nice. Okay. But then you don't know which ones of these companies you can rely on over the long term. I do think this is one of them. I will tell you that. That would be a good question. Do you think Google is a closet stock? Yes, I do. Just buy it at the right price. But as far as the chart goes, you can make that yourself with any mega cap. Just draw a line over the tops and draw a line under the bottoms. No problem with that question. What percent cash are you holding in portfolio? I don't know exactly right now. I just follow the rules. Like really. I honestly don't know what percent of my portfolio is in cash because I'm just following the rules. When the rules say to buy something, I buy something. When the rules say to sell something, I sell something. Right? With the leftover money, I put it into a box. And whatever I have in my portfolio, I have it in my mind what percent of that I want to put in RWM. So I put that in RWM and the rest is in box or cash or whatever. And I don't worry about what all those percentages are. The only percentage I am calculating is what percent of my long positions is going into RWM. Which, by the way, if I do that calculation, and see the thing is once I do that calculation, I really don't know what percent I'm long, what percent I'm in RWM, and therefore I don't know what percent I am in cash. I'm just following the rules. And that makes it easier for me because if I start thinking about the percentages, I might make a rule break. I might break a rule. I make more money when I just follow the rules. Mark, when you thought TSSI was going to fall, it skyrocketed all the way up. Then you thought it was probably going to have a good quarter and it tanked. What's your next prediction for TSSI? I love that. Yo, and this goes back to what I tell you about quarters, all right? We had a whole speech about quarters. Calling quarters is a very tough and treacherous game. But what is not a tough and treacherous game? Okay, so cool. I'll take the heat. I'll take the heat because you guys want me to play the game. And if you want my opinion on a quarter, sometimes I will give it to you. But I tell you, what's the most important thing is to follow the rules, not to make bets on quarters. Okay? And here are the rules. The rules say at the red line, you sell. Boom. If you follow the rules, I was right every single time. Bought at the green, sold at the red. You buy near the green, you sell at the red. Boom. Win, 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 win. No losses there. All right? You start talking about quarters, playing the quarter, that's when you can start losing. Yes. So thank you for that question, because it just goes to prove what I've been saying is that the red and green lines are way more important than trying to outthink what's going on. Okay? Absolutely. Qbert, thank you for that question. As backhanded as it was, but I kind of like it. I like how you did that. You didn't troll. That was, that's smart. I like it. Can I ask your opinion on the valuations of AI data center companies at the moment, considering the strong hype around? No. See, and it's a cool question, Job, but one by one, I go and I look out at these valuations, okay? And then I'll come here. If I complete an analysis, that's when you're going to get my opinion on one. I gave you on Techagen not too long ago for an example, right? So I don't do this on request. I do this in order of where I see the juiciest opportunities. I'm like, oh, this one looks juicy. Let me research it. And then I do 100 hours of research. And at the end, it either confirms, yes, it's juicy, or no, it's not juicy, or oh my God, this is overvalued. I come out here, I'll give you that information, and I move on, right? So I do look at NBIS. I do look at IREN. I haven't looked at the other two too much of late. TeraWolf I haven't looked at all, but I may at some point, and if I and when I do, just stay tuned, because I'll give you that information as it comes in. Risk reward chart on QQQ. By the way, we're going into the lightning round because it's 3:47 and I'm signing off at 3:55 because we got, let me see what we got here. We got stocks to buy. QQQ, risk reward chart. There you go. ITMSF chart, please. ITMSF. It was better the first time. That's what that looks like. Still unknown on the top line. That's why it's white and not red yet. Hard to know what the upside potential is. It's still developing. Sometimes it's just too tough. Kraken was an example of that, where I put the red line but told y'all all along, this is the one where I'm scared I might be wrong. Right? Maybe I should have kept it white, right? But there you go. We made good money on that just the same. Sometimes it's just too hard. ITM, SF. There you go. Lightning round. Do you consider yourself a rule breaker for owning Curie and KRMD? Speculative. They're not speculative. No, Ben, those are not speculative stocks. They're doing great. They're doing absolutely phenomenal. Those are gold mine stocks right now. IDN seems fairly low on your risk reward chart. Do you feel that it can reach the top line on a longer term basis? Yes, of course. And Marty, that's cool. Go watch my video, listen to my spaces, and read the article, the instruction manual, so you can understand. My decision to get out of IDN was based solely on the fact that I thought that to make 55% in one day, I had to book that profit because I didn't think the news was commensurate by a large margin. It's one thing if I thought that the earnings justified a 20% move and the stock was up 25%. Would I sell the stock? Probably not. Because who am I to tell the difference between 20 and 25%? But I thought that that earnings call was worth maybe a 20% move and we got a 55% move. That's too much. If the stock comes down so that it's a 30% move, say, that's when I'll start getting back into the stock. Great question though. But of course, if the lines are red and green, right? White is okay. That means unequivocally that I do think that the stock can get to that point at some point, by definition. Okay? Let's go. Lightning round. Will you share or post that Gatekeeper FRA projects table? Yeah, I can do that. I'll write that down. Right? In my notebook, my pen. What's my biggest bear case on Curiosity Stream? I really don't have one right now. Honestly, I really like what they're doing. A couple weeks ago, you said Crescendo is growing rapidly in their underlying business. Do you see them getting into a similar position as Gatekeeper? No, not that same groundswell. No, it's two different companies. Right? I love Gatekeeper and Crescendo, and I love the move that it made. I thought that was crazy. I was a buyer on the 200-day moving average. You see the stock's up 4.4% today. This was definitely on my shopping list. I didn't put it on the shopping list for today, but I could have and should have. Okay, so that's another one that I'm going to be looking at going into the close here. I asked my precious question not to make the point, blah, blah, blah. Not to listen to CB. I asked my precious question to make the point. Yeah, I don't want to make it a point. I want to talk about stocks. We got a limited amount of time, so it was fine. No big deal. What's your opinion on advanced packaging manufacturing shifting from organic to glass core substrates for better performance? Whoo-wee. Ask AI about that, but we'll put that down maybe for next time. Let's see. Organic to glass substrates. I like that question. I just don't have the answer right now, but I will look into that. Okay, another thing for me to do. And I'm sorry if I took the question the wrong way, but we just want high quality questions regarding, like, I don't want to question about what I preached and teached today. Most people don't want to be preached and teached to. They want to know about stocks. So it's no offense, man. It's all good. My bad. If Nvdia, we got 3 minutes left. If Nvidia's accounts receivable increase was due to more generous terms, doesn't that signify a possible gross margin decrease in the future as large companies gain more leverage in talks? Possibly, but let's wait and see. This is the thing. People are jumping the gun. We don't know what happened there. It could have been as simple as a tremendous amount of those shipments went out on the last day of the quarter and didn't get paid for on the last day of the quarter, because you receive the shipment and then you pay for the shipment, and then your accounts receivable goes up as of the end of that quarter, but then it's paid for. Like, people are freaking out over nothing here on that, as far as I'm concerned. It could be something, but 90% of the time it's not. So let's go with the high probability bet of it being 90% that it's nothing. Wouldn't Gatekeeper's deal with Alstom allow for higher margins, since Alstom would be doing factory installation, saving the cost of that work for Gatekeeper? Yeah. Look, all else being equal, more business, doing a lot more business, that's called economies of scale. And yes, it brings higher margins. Since you covered Oracle, would you please share your thoughts on it regarding raising $15 billion in bond news? I'm not too worried about that. That lightning round. Not too worried about that. VTSI chart, please, because we're down to the last 2 minutes. I just wouldn't be, like, I'm not hyped on Oracle, right? I'd rather have better at these levels, but, better at these levels. I mean, if you buy Oracle today, I'm not going to hold that against you, right? But I told y'all it was a short back here. That was correct. It was not a buy at the red line, right? That was correct. Look, the stock is down, 25% from the red line and 44% from its peak. We won. If you want to start buying Oracle and putting it in the closet, that's cool, because it's come down a lot. And this is a decent move down, in a risk reward chart for a mega cap. because Oracle, I don't know. Look at that. See, it's rarely been at the red line. It's close. It's usually more in this, right? Following this line right here. So I don't know. I'm not a. I don't love Oracle at these levels. Your VTSI chart. We got 1 minute left. What's keeping me from making Curie an official pick? David, if you've been watching me for a long time, you know not to ask that question. I got to check every single box. I'm like meticulous. I'm maniacal. Okay? So, I mean, my unofficial picks do great. My non-picks do great. Like, but you got to check every single box. I want a 10, 10, 10, 10, 10 to go into that. Look, I got no losers, 0 losers since my baby was born. I want to keep that streak going. And the way you do that is to be picky, 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 picky. You just, so that's what it comes down to. So I like Curiosity Stream. I've bought more. I own a lot of it, but it's just, it can't check every single box. It checks a lot. Does Nvidia have any financing risk due to the circular financing? No. And that's it. 355. If you love what I did for you this week, what I do for you every week, please give me that thumbs up. Please have a great weekend. Please read your notes. Make your notes. Buy these 2 things, please. Like, really, these are the most important tools for me becoming a millionaire, because without these, I cannot write down the rules. Without writing them down, I cannot memorize them. The brain is not a storage device, it is a processor. So you want to write down the rules so you can learn them. It makes it easier for your brain. Yes, the brain does some memory, but it's not built for that. And writing things down helps with that. And anything that helps your memory when it comes to following the rules gets you 1 step closer to having a penthouse in Miami Beach, making 7 figures per year like your buddy Money Mark, who's here every Friday on Stock Talk Live. Have a great weekend. Take care. Let's see what we got to buy here. Into the close. We got some buys to make. Let's see. I'm not going to tell you which ones. We're just keeping it live for a second. This is my outro. Let's see. We're going to buy some stuff. What are we going to buy? I'm going to buy some of this. Let's get a buy here. These are all names I talked about on the show. So don't be surprised that I'm buying these things. It's just the ones that didn't go up enough in my mind. I'm doing some buys. It doesn't go up in my mind. I'm doing some buys. Look at that. That one right there. I'm definitely buying this right here. Oh, the bid-ask spread's wide. I don't like that at all. But let me see. It's that plus that equals that. I'll still buy some. I'm still going to buy some of that. I mean, there's just so many nice little buys out there in the market right now, right? Not to back up the truck, but just, add to your collection. It's like when I was collecting baseball cards. Let's see what kind of fill we get on this. If we get a nice fill, we'll buy some more of it. Come on, give me a fill. Partially filled. No, you're not giving me a good fill. You're making me pay the ask, and it's a wide spread. Let's move on to the next one. What else is on my list here? That one? No, that one's moving nicely.